Very strong quarter for most of the statewide investment options, from high growth equities, MySuper. One option was negative, which was diversified bonds, but a really good quarter and also a very good year for most of the options from this time a year ago. The MySuper option for 1 year ending March finished with 19.92%. The great news for our members who think in terms of the long term, they've had a very good 1 year return that's added to their balances and recovering, particularly from the bad March of this time a year ago. So following a very strong year, in terms of our investment strategy, I'm surprised to hear not much has changed. I mean, we do look at long term and how we manage our portfolios. If we look back what we were doing a year ago, we wanted to be owning a well-diversified portfolio. We like the idea of being invested in Australian shares, international shares. We particularly like the small to mid-cap area of Australian shares and international shares. We had less of the glamour tech growth, what we call darling stocks. And as the economies have bounced back, those sectors that have been left behind as people have gone from work from home back into the office have done very well, and that's been reflected in our returns and our various asset class options. Australia is doing a lot better than we all feared this time last year with the COVID outbreaks. And the conditions are there: low interest rates, the global economy growing, therefore helping the Australian economy, a fiscal stimulus, and more importantly, coming out of COVID and hopefully rolling out of vaccines. The Australian economy is well placed for the next couple of years to grow well and strongly, which means lower unemployment and hopefully good markets. So in the quarterly, we talk about 1 year lessons learned, and there are lessons to be learnt from this. If you imagine this time a year ago, we were in lockdown, the markets were in meltdown, things looked fairly grim. A year later, if we look at the MySuper option, it's up 19.92%. And I think the important thing in lessons learned is having a long-term investment strategy. And it doesn't matter if you're in your 20s or 30s, 40s, in pre-retirement or post-retirement, because markets can change and conditions change, and you can get these short-term shocks, and then people start to react to that and adjust their changes. So those who went to cash have missed out on the really strong returns as the markets have come back. And I think the important thing is, when conditions are changing, to seek advice, to call us, because offering that help and helping you achieve your goals, you could be young or old, and staying to that discipline is a key to meeting a good retirement outcome.